Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin economic calendar, the news and analysis you need to start the week off right in Bitcoin. I'm Mauricio Di Ortolomeo, co-founder and chief strategy officer here at Ledn, and today is Tuesday, July 19th. As always, we have a great episode for you this week. Last week, we discussed how the strength of the US dollar was essentially causing havoc in developing economies, making their currencies devaluate to a great extent. And we also talked about how those devaluations in those currencies are leading to social unrest. This week, we're going to talk about how volatile capital flows in those markets could impact the price of Bitcoin in the near and medium term. We're also going to discuss the European Central Bank, which is scheduled to make its first interest rate hike in 11 years this week. We'll discuss how that could potentially impact the prices of Bitcoin. And last but certainly not least, this week we get big earnings reports out of the US with the likes of Twitter, Tesla, and Netflix all reporting this week. Details ahead in this issue. Grab your coffees, it's going to be a great one. Now, starting as we usually do with Bitcoin, we see that so far this week, we're off to a pretty good start, up 12%, just over 12% for the week so far. Looking at last week's candle, we see that Bitcoin did break below 19,000, but was able to recover, then close above the very important $20,000 mark, and has since been rallying since touching bottom. Let's open up the daily here to see the day that we hit the low was July 13th, and we see that it's been essentially a pretty healthy rally from there on. And right now we are trading north of 23,000 at $23,300, near the highs essentially for the week and the session. Now, interestingly, if we look at the traded volume we saw last week, where Bitcoin basically broke below 19K and then recovered to close over 20, we see some encouraging signs. For one, if we look at the traded volume for last week, we see that it was actually one of Bitcoin's highest weekly traded volumes ever, which is a pretty good sign, as it means that there was enough demand to absorb all of the selling. And after the selling was basically finished, we've seen Bitcoin rally upwards, great deal based on that demand, on that excess demand. So again, the sufficient demand was there to absorb all the selling below 19 and essentially drive the prices now higher. Let's talk for a second about better weather in digital assets and crypto in general. It has now been 2 months since the Luna and Terra collapse, and it's been over 5 weeks since Three Arrows was suspected to be insolvent and crypto platforms Celsius and Voyager paused withdrawals, among a few others. These events introduced a lot of uncertainty into the industry, as there was a lot of speculation as to who else may have been impacted and whether more forced selling could be on the horizon. Now, over the last 2 weeks, a lot more information has become publicly available through the respective bankruptcy proceedings of these platforms. As this information comes to light, investors have been able to better assess the potential impact going forward. And this has removed considerable uncertainty from the mind of investors. And it appears as though the majority of the forced liquidations that drove prices lower are mostly through. Now, for abundant clarity, Ledn has not experienced any losses in our institutional or retail loan books to date. We did not have any lending relationships with Three Arrows, Celsius, or Voyager, and we review the financial position of our institutional counterparts routinely to verify that they're able to meet their obligations to Ledn. We recently published our most recent proof of reserves attestation with a certified public accountant, and if you are a Ledn client, we invite you to log in and verify your inclusion of your assets in the attestation if you have not done so already. There's instructions that we'll leave at the bottom of this episode as well. Now let's talk a little bit about macro tailwinds for Bitcoin and crypto. And for this, we're gonna put up this article that came from Goldman Sachs CEO, and this was published by CNBC. But in essence, this talks to a lot of what we discussed last week. Higher fuel prices, supply chain disruptions, an active conflict in Ukraine, Russia and Ukraine, and the growth in the monetary base over the last 24 months, aka all of the printing that was done, has caused inflation to soar globally. And then, as you can see, this is echoed by the Goldman Sachs CEO in this article when he says, inflation is deeply entrenched in the global economy. Now, again, as we covered last week, inflation has slowly been turning into social unrest in some markets, which in turn is causing inflation to accelerate even more. This dynamic could lead governments around the world to intervene on their currency markets and set restrictions around their exchange rates. There's another article that came out of the US Treasury Secretary Janet Yellen, which again discusses that, or she cautioned, emerging markets facing volatile capital flows from essentially doing just this. In the article, she speaks to any type of intervention needs to be very thought through, so that it does not lead to the wrong impact. And in my experience in Venezuela, whenever these restrictions are placed, it just accelerates matters even worse because when investors feel like their windows are getting closed or narrower, they tend to act much faster to do just that. Now, again, Treasury Secretary Janet Yellen echoed the sentiment that we essentially wrote about last week in her statement. And she does say that emerging markets will face volatile capital flows. In English, this means people trying to sell the local currency for dollars. Again, more so in plain English, this also means that investors want to get their money out fast. And this puts enormous pressure in the local exchange rates and the books of those exchange rates in central banks that cannot absorb that exorbitant demand for US dollars. Now, governments that are bleeding capital, as this happens, start looking at the gates and start trying to close those gates and limiting to outright prohibiting people from protecting their savings. There are many good examples of this, but a good recent example is Russia. This is the article on your screen right now saying that Putin signs ban on crypto payments in Russia. This article came out last week. This, fellow Bitcoiners, is an encouraging sign. Far from deterring the cause, these types of bans by governments only act as a marketing campaign for its use locally. We are heading into some hostile territory for many global currencies. We said it last week, and we'll say it again. It is in these dire circumstances that I found Bitcoin and many others did in Venezuela. And these dire circumstances, far from being a headwind, these coming months are a reminder of why the world needs Bitcoin. And as I mentioned last week, this is our time as a community to make sure that we're raising our voices and letting those who need Bitcoin the most learn about it and get educated about how they can protect their savings. More on our What's Ahead section just ahead. And as always, we leave you with what's ahead for the week. The week ahead will give us an interest rate decision from the European Central Bank, corporate earnings from Netflix, Tesla, and Twitter, among others, and more details from Chinese regulators intervening to stabilize their local real estate market. Now, looking on the Bitcoin side for a second, the futures markets continue to price in quite a bit of uncertainty. However, the futures curves are now starting to look a bit more normal, as you can see here. Oh, my head doesn't let you see. But again, if you look at the curves here, which typically are slanting upwards and to the right, you can see that we're starting to see some normalization in the shape of those curves. They still show some more irregularity than they typically do, but again, the general direction is looking much healthier now as it moves upwards and to the right in a contango, as most cases these curves should behave in. Now, moving away from Bitcoin, as we said, investors should expect the week ahead or the weeks ahead to continue being volatile, given the macro environment that we have, again, with an active conflict and inflation soaring around the world. As well, we have upcoming central bank decisions from the European Central Bank on Thursday, and we get the Fed's next decision next week. The Fed's next meeting happens on July 27th and 28th. And so the time between now and the next Fed meeting, which is essentially rid with corporate earnings and other central bank decisions, could very well be volatile as the market essentially awaits for the Fed's next big interest rate hike and how big that will be. For now, let's talk about the earnings and other central bank meetings that could move the markets ahead of the Fed, which happens again towards the end of next week. Today, we get earnings from Netflix, and that happens after market hours. On Wednesday, we get earnings from Tesla. This will be interesting for a couple of reasons. One, they will certainly talk about the changes in the market valuation of the Bitcoin position that they have, and they may once again talk about Bitcoin or cryptocurrencies as they have done in the past. Lastly, on Friday, we get earnings from Twitter. Again, interestingly, as many of you know, there's an active deal. Essentially, Elon Musk and Twitter. We'll probably get more information about that during the earnings call, as well as any other potential Twitter plans that may or may not involve cryptocurrency. So again, these earnings calls and others could be relevant to Bitcoin, but we highlight the ones that were the highest chances of that potentially impacting Bitcoin. So as we mentioned on Thursday, actually, we get the European Central Bank making an interest rate decision. Right there, the expectation is for the central bank to increase interest rates by 50 basis points in Europe in an effort, again, to bring down inflation. The markets will certainly be paying attention to that, along with the earnings that we just mentioned. Investors should stay alert between now and the next Fed meeting because, again, markets could remain volatile between now and then. With that, we've reached the end of today's episode. If you enjoyed the show, if you liked it, I welcome you to thumbs up it, subscribe to our channel, share with your friends. And if you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning the best interest rates on your favorite assets, Bitcoin and USDC. We also have the best rates for dollar loans backed by your Bitcoin if you need liquidity and don't want to sell your stack. And lastly, our latest product, the Bitcoin Mortgage, lets you buy a house as big as your stack. Thank you, everybody. Have a wonderful week and see you next time.